Welcome to TradeTheMBI.com. This is John. This report is for the 22nd. And yesterday, panic with the eclipse, all sorts of doomsday prognostications, and what happened? We all survived it. Go figure, just like we have for millennia. And the market rebounded slightly from it. So go figure. Plus, you got little comments from Senate Majority Leader saying, without a question, the debt ceiling would take place. And I think that was a reassurance to the market right there. We're still continuing to see softness both in the shakeout, but the orange fading now in between the continuation zone at this particular point. It hasn't faded all the way below, and you've got well, it's not a horrible deep reading at minus 13 for the Omega here. So it's not by any stretch a turnaround guarantee major pop kind of situation, because while you have an improvement in the extreme histogram here and the right kind of things taking place with short-term buyers really jumping into this hard, a little bit of fade into from shorts down below the zero line, you got to see a lot more activity from that and a bigger turnaround in the general improvement. What we really need to see, though, will be a strong continuation of shakeout rising, along with serious activity from the green line here moving up. It's been pretty much flat line, which indicates there's just not a lot of participation as far as, well, any kind of build. And this is kind of the pattern you would expect to start to see a break up, or you're literally going to just continue to test and start making new lows, particularly with the shakeout reading getting close to that negative 13 range, which would be a real distribution, something to keep an eye out for. Not really a problem for us since we have our ABM levels that we can play off of. Keeps it nice and easy that way. There's been a reset here from all of these, expecting turnaround in this. Now you can see the NQ a little bit stronger here with the levels of where the DOC is, but not necessarily any of the behavior. So we're seeing a very similar behavior in algo activity. We're just not seeing as deep a sell-off that we saw in the S&P, and you can see much stronger extreme histogram and rising in all the right forms. So this should produce a little bit of a move. The last time we had that kind of malaise period of them was right about here, where we just creeped around, but it still ended up making a little bit of a push higher, and that's pretty much what I would expect to see. Euro's holding up just fine. It's actually spiking into the 118 range. So as long as it stays outside the target zone, I think that's bullish for the S&P in general, because there's really no justification based on European dynamics that it should be doing that well. But nobody worries about those kinds of things when central banks are involved. Likewise, treasuries are still getting a lot of support because there just seems to be a perception of uncertainty, and now you have your Afghan policy and these kinds of things. So I think that the idea that things are pretty much status quo is starting to sink in a bit for the market, and that's going to lower some expectations, but it also doesn't change the fact that we're starting to see some real growth, and oil really becomes the test of that, because we're going to see whether or not these spikes are sustainable as we move back up to the highs, back from here in the early part of the spring. Would be an indication that we're starting to see it. That was the optimism back then. Then we had huge supply increases. We've worked our way back up as we've seen economic improvement. It's going to be interesting to see how that works out. If we find out in the next month or so that that's real sustained growth, then you're really going to see oil start to tick back up and gain support, because they're going to know that demand could outstrip supply very quickly. It wouldn't take much at all for that to take place. Gold is still going to be that safe haven, as well as just the general demand for it continues to be strong. So I think that that's going to continue to rise, particularly with the expectation that inflation is finally going to come. Of course, they've been talking about that for a decade, but in this particular case, it actually may be real for the first time. And here we have the terror trade from the eclipse coming through, and as it was happening, the new lows were being made, and when the world did not fall apart, nothing got destroyed, the buy signals came in, crossed over the long algo, and took off from there. Let me increase the size of that because we don't need to see all of that. And then we had a nice little pullback to the 50% Fibonacci line. Isn't that amazing how that goes? 100%, and then right back down to the 50% line, and then we make a new run, which creates new highs. And if we were extrapolating amounts over there, you probably would move to the 150% range, would be what you would typically look for as a target on that from the highs going forward. So that's generally how I usually perceive it. I haven't marked that kind of stuff. I could create one that does a projection line, but I don't know that it's all that helpful, particularly once you start following these readings and that. Once you've got that cyan under the red, there's nothing to do. It's still a buy signal. So having that as a target upside could cause you to get out of a potentially good run too soon kind of situation. We don't want that, but we certainly want to keep following how these things run. Today, the 22nd, is an important day. It's an anniversary. It's the first one without Amy this year, but I think the market will rally on her behalf. So we'll see how that goes. As always, though, look for you on Skype chat. Trade well.